one of the most perceptive voices as far as watchers of the economy go. Rajiv Malik is senior economist at CLSA, and he's joining us from our Singapore studios. Thanks very much, Rajiv. It's always a pleasure. Thank you. Let's just start with the very immediate, which is demonetization, cash exchange. I mean, now that enough time has passed, and we're also coming close to the deadline, that is the end of December, for exchange of notes. What is your assessment of the impact on business momentum and business activity on the ground?
Look, the near-term impact was always going to be negative. Don't forget, the most relevant reason for that is the liquidity squeeze, the cash squeeze. And that is just going to play out as far as the real economic impact is concerned. Our sense is December will be the month which will capture the most severe impact in terms of hit to output. Part of November would have been adjusted by just businesses running down inventory. So the production impact will actually be more pronounced in December. And thereafter, more or less in sync with as the cash squeeze gradually dissipates through the end of the first quarter, activity sequentially will improve slightly. So overall, roughly a two-quarter impact that's being modeled in a very, very imprecise manner, I should emphasize, given the fact that there's very little really to hang our hats on.
So Rajiv, what could the GDP growth look like in Q3 and Q4 of this financial year, and therefore, how does it bring down your full year estimates and no change to F518?
So our way of thinking about it is, like I mentioned, two-quarter impact. We've shaved off roughly 2 percentage points of growth that we were expecting prior to the currency swap. And that takes down the full year number by about a percentage point. So we had 7.6 earlier. We're now looking at 6.5%. Do bear in mind, this exercise has never been done anywhere before. There's hardly any sensitivity. We're very much, in uncharted territory. And the very fact that policymakers, both in terms of the government and RBI, have been able to offer exceptionally little clarity in terms of hit, just puts us all much more in the dark. But broadly speaking, two-quarter hit, which will set the stage in a way for second half of FY18 to at least optically look better.
Right. Okay. What is the impact of this on the budget, I think, is what everybody really wants to know. But before we get to that, I want to ask you, what is the political implication of demonetization, Rajiv, according to you? You write in your report that this is most likely going to benefit Mr. Modi.
I think so. I think at the end of the day, for all the visuals and comments and, playing up of commentary from the opposition sides about all the distress and anxiety and inconveniences, many of them which are legitimate, I think at the end of the day, it's an area which is being touched in a very bold manner, which, many governments have not done before. Now, I think it's a classic case of a very well sought after goal being approached with a questionable tool with exceptionally poor implementation. So I think a lot of the debate gets clouded by what is the goal and how are we going to achieve it. I think the first is very welcome, and that is where a lot of political legitimacy is going to be gained. But the implementation has been bad, which to some extent I think the budget will begin to address in terms of a feel-good approach. Now, one big question mark is going to be really to what extent do government revenues directly and indirectly benefit for FY18. And whatever we might say, pre this exercise, the actual impact on revenue would still be positive, right? So whether it's in the aggregate terms slightly under a percentage point of GDP, it certainly will give the government more leeway to spend it. And part of generation of that feel-good factor would have to be in terms of, raising the exemption limit as far as personal income tax is concerned, for example.
Okay. Rajiv, we're going to sort of disaggregate those numbers and just a bit in terms of assumptions that you've made, tax collections from IDS2, etc. in a bit. But journalists, I guess, across have sort of exercise that they do before elections. They put out their own forecasts in terms of who's going to do how, state elections or central elections. I'm going to ask you to put out your forecast. You're a very keen political watcher as well, I know. UP, Punjab, who do you think? I mean, if you were a betting man, who would come out ahead?
Anybody's guess, quite frankly, at this point. There are winds that are tilting in one direction, but simply because of the number of players involved, and depending on how pre-post coalitions, etc., necessarily get formed up. So there's a fair amount of stuff up in the air that remains to be seen. But I think what's more important is, quite frankly, I think everyone plays up the impact of state elections. I would be somewhat more restrained. Yes, politically, UP will matter a lot. How much of it is going to change in terms of policy making is a separate issue. Go back to Bihar. How much of a change did it necessarily trigger? So I think the calculations, etc., can change.
Where I'm coming from, Rajiv, is it'll matter a lot more this time because people have already started talking about 2019. It's still away, right? And UP and Punjab essentially will, to a lot of people, show whether this has strengthened Mr. Modi and BJP's sort of hand and cards. Yes.
I don't know. I think people love to talk about the long term, partly because it doesn't cost anything. I mean, I've heard about, what in 30 years India and Indian economy is going to be like. It's, great anecdotes.
This is 2 years away, Rajiv, not
talking
30.
about concepts. I understand that. The point I'm trying to emphasize is we'll extract far too many signals from state elections to lead into national elections, and the two tend to follow slightly different dynamics. That's all. Not saying that it's totally irrelevant. It is important. I would just be restrained in terms of how much a signal one extracts from that.
Okay, Rajiv, fair point, but we've got a lot more questions for you lined up on the currency, on the bond market, as well as what the budget might have in store for us. But all that after a short break. Stay with us.
When you say budget for financial year 18 will be a feel-good budget, can you explain that a little bit? What exactly do you mean?
I think tactically, one of the big benefits from public finances really is going to be to the extent that you have part of the informal, unaccounted economy coming into the formal network, and to what extent it lands up boosting on the revenue side. Don't forget, at the halfway point of Modi's first term, it's really a case of how much of firepower is there in terms of pumping up on the fiscal front. We know from a private capex standpoint, not much is happening. Public capex, yes, has been doing well, as much as potentially they could. Private consumption, which is what was holding up growth, at least for a couple of quarters, will have a setback because of this currency exchange playing out. So the question really is, even if it is an experiment whose implementation has gone horribly bad, how do you reverse that feel bad optics to a feel-good optics? And that is where, to the extent that the government gets a bit of a revenue boost, how much of that can be distributed. I would think of the budget exercise very much from a redistribution perspective. I don't think there's going to be a whole lot of new initiatives per se. There will be very much a focus in terms of improving whatever currently has already been announced, but most important is going to be in terms of generating a feel-good factor, which clearly has to come from some goodies given to either individuals from a higher exemption limit to the pro-poor, pro-rural areas. There's already talk about some kind of a sector-specific farm loan waiver. I don't think it's going to be anywhere in size compared to what we saw during the UPA. But all of these, when you put together, tell you about how the political optics themselves are shifting away from the whole energy that we saw until very recently in terms of trying to boost growth.
Okay. All right. Rajiv, the other big dislocation in the markets, in the global markets, was caused by Trump's unexpected victory as the 45th president of the United States. How does it alter your expectations of where the dollar is headed from here? What happens to the rupee on global bond yields, as well as the picture in India?
I think 2017 is going to be dominated by what a stronger dollar lands up doing to emerging markets overall. And I think India, which clearly has been one important beneficiary of this combination of weak global growth and exceptionally easy global liquidity, will have to adjust to changing dynamics in both. So our sense remains the combination of stronger dollar, higher US rates, higher US bond yields, etc., will extract a price for all EM currencies, and the rupee is not going to be any different. There is no doubt that India and the rupee underpinnings are far, far better than what they were during the 2013 taper tantrums. But that doesn't mean that adjustment is not going to take place. An exchange rate is a relative price. And the fact that the dollar is going to be stronger and the US yields would be heading higher will have an impact. I mean, don't forget, India has been an important beneficiary of just the high yields that local currency government bonds have generally offered. So we will see a bit of payback on that front coming through. The net result, while I do think there will be a bit more modest easing from the RBI, including one in February, I think the bigger impact is going to be on further rupee depreciation. So my sense is by end of 2017, 73, 74 is not really an outlandish number.
73, 74, not an outlandish number. Rajiv, it's a pleasure. Thank you very much for joining us.